All right, good morning, everyone. We're going to wait a few minutes for everyone to join, and then we'll begin. Hey, everyone. Good morning. We'll wait just for a couple more people to join us, and then we'll begin our webinar. All right, I think we can begin. So hi everyone again, and a very good morning. I'm very happy you joined our BridgeWise webinar today, Wealth AI in Europe. This morning, we're going to unpack what happens when compliant meet the new investor. My name is Lotte Mobenstein-Levy. I'm a marketing manager at BridgeWise, and I'll be moderating this discussion. Today, we're not only going to talk about how AI is changing our lives, but we're going to fundamentally understand how it's reshaping the way investors discover, decide, and interact with financial platforms. And Europe has a very special environment to do so because regulation and trust are the foundation of everything. We'll explore that tension between AI, regulation, and technology through three different lenses with the help of three amazing guests that are right here with me. I would very much like to introduce Anna Roth, Senior Equities Product Manager at Six, Arietta Haskai, Head of Product Strategy and Director at Swissquote, and our very own Dole Ligula, Co-Founder and Chief Business Officer here at BridgeWise. If you have any questions during the webinar, please feel free to drop them in the chat and we'll answer them at the very end. Let's begin. Arietta, I would very much like to start with you. First of all, good morning. And as a strategy expert in the Swiss market, let's go back about 5 years from today. You would agree with me that since COVID, we've seen this major shift in financial markets. If in the past you had to have certain level of expertise and basically be a professional to participate in the market, we've seen this shift in how investors make decisions and invest. How does Swissquote actually see AI changing investor behavior today, especially in Europe?
Hello, good morning, everyone, and thank you for having me in this webinar. So yes, Rotem is totally true. Since COVID, there is a lot of retail investors in the market. The market is more accessible, and AI is going to widen it even more. So with AI, retail investors will have more and more access to things that before were for institutional. However, there is a catch with AI. It is important that the investor uses the AI carefully. There is one big fundamental point, which is trust and privacy for AI. So when taking investment decision, the investor should use the AI from a trustable source, so a regulated financial institution, for example, so that he knows that his data are safe and everything he gives to the AI are safe. Another thing that the investors do a lot is they think that the AI can give them the next investment idea that can make them, I don't know, 300% the day after. So they just ask to the AI, where should I invest? But this, in fact, Swissquote, we are always saying this, that the AI should not replace the investor. Yes, the AI will widen the possibilities for the investor, but it should be a co-pilot. It should be like an augmented brain that can push his intuition, but the decisions should come from the investor and not delegate all of them to the AI. Also, because in order to give financial advice, you have to have a specific license, you have to be regulated, and this is not the case for the AI. So we need to use AI for what it does best. Collect all the data, give us more efficient data so that we can take better decisions. So it should be our co-pilot, but not replace us as an investor.
So I highly agree with that. I think you have to develop trust because without trust, adoption of new technology actually becomes more difficult. And I like how you framed AI as the co-pilot here. Let's try and build on that. Anna, you're coming from another perspective. You sit at the stock exchange itself. Have you seen any change in the volume of execution in this new era of AI?
Hi, good morning, everyone. So, Six is an operator of exchanges in three jurisdictions in the UK, in Spain, and in Switzerland. What we've seen is over the last few years an increase in retail activity on exchange and coming through brokers. This may very well be driven by AI, since AI gives easy access to financial information, easy access to understand the different asset classes or identify what could be the next investment target. I mean, why we see a lot of retail activity in the market, this is something that sparked interest from the more professional investor side as well, because retail flow is seen as something attractive to the market due to the low impact in trading. So yes, we see more flow, and we quite like that as a market, since we can give access to this very low impact market driven flow to the more to the professional investors and institutions. Um, the thing is, there are different products in the market that that can really drive this type of activity. For example, benchmarked offerings. The key thing here is with the increased retail flow and institutional interest in that flow, we need to keep in mind that best execution still needs to apply to the execution of the retail investor.
So we're not only seeing change in behavior, we're actually seeing measurable market impact. And we've talked about how the investors' expectations have skyrocketed today and have evolved. And a platform needs to be able to deliver these full experiences as financial institutions are undergoing pressure to innovate faster. Dora, maybe you can share a little bit on your point of view. How do financial institutions evolve faster in Europe, where regulation is super strict and you must operate within compliance and trust frameworks?
Yes, definitely. I'll start by both echoing Arietta's and Anna's points, and of course, thanks both of them for to thank both of them for joining us today, having both two let's say leading executives, ladies from reputable organizations like Six and Swissquote with us today is not something we take for granted, and so thank you both. I'll start by let's say saying that we believe, and we all have to recognize that in financial services, regulation is not an obstacle to innovation, but in fact, it's a foundation that you need to build upon, and in the end of the day, enables trust. That's in the core of any financial services. Of course, part of it, capital markets. And every investment decision, just like Arietta said, can have a direct impact on someone's financial well-being, and they need to take responsibility on it, not relying ultimately or 100% of it on someone else, either human or machine in that case. But they have to understand the fundamentals of it. And so institutions must ensure that any technology that they deploy, especially in front of clients, is transparent, auditable, traceable, and therefore accountable, because again, that's in the core of what we do. The challenge is that in most generic AI tools, these were not built for financial institutions because of the reasons I've just mentioned. They are, I guess everyone here would agree, incredibly powerful with every new model that is being launched, but they often lack the explainability, again, traceability, those things I've just mentioned. And that creates a gap between what AI can do and what the actual users and therefore the financial institutions expect or can responsibly deploy. And that's why I believe that's a BridgeWise thesis in the end of the day. AI must be quote unquote verticalized, or we must create a foundation for these applications, wealth or financial services. Otherwise, we'll stay behind. And again, what BridgeWise is doing is exactly that, I believe. And again, that's the vision of the company and the mission. Europe specifically is particularly important and very because again, adoption cycles are somehow uh, slower, I would say, given both business culture and also, let's say, risk aversion. And of course, On the other hand, I would say it in a good way. Europe has constantly been in the forefront of regulatory frameworks, all the way from AI Act and GDPR and some other MiFID, of course, and other regulations that, of course, helps again build that trust and helps protect, quote unquote, the clients and investors, and to ensure the integrity that we all want to have in our industry. So again, I'm saying it in a good way. In the end of the day, I believe the institutions that will succeed are those that chooses between, let's say, the right pace of innovation, because we must do it, or they must do it together, of course, potentially with companies like us or themselves. And on the other hand, compliance, choosing the right paths or vectors they operate. Again, I guess we'll cover it in a few minutes time, but the buy versus build equation or dilemma is important. But again, we have to push forward fast. Otherwise, users will be less and less, let's say, convenient with the services they get, and that's a big task on all of our shoulders.
Okay, I think you touched on some really interesting points, and we'll get to all of them. But let's actually, I think one of your major point actually brings us to the execution. So, Anna, in our earlier discussion, and also in your earlier point, you mentioned the importance of delivering the best execution. What does that actually looks like from your perspective as a senior equities product manager, and how do you actually put that into practice?
Mhm. So best execution on this side is very much the execution of the order. So this is to protect the investor on the order execution side, so not the decision-making side. And I want to make that very clear. So brokers that receive retail orders need to deliver best execution. That means they need to best execution is defined as likelihood of execution at a certain venue, the speed to get the execution, the cost and the price of, so the venue cost, but also the price of the asset. And there's a bunch of factors that have been defined as delivering best ex. So, and they are been monitored on the broker side. They need to be presented to clients if they demand it. So there's a lot of accountability around these factors. And that is a stark contrast to maybe some of the investor expectations that we have today of seeing a price and immediately wanting to act on it. But there is an accountability on that order execution. So when I'm as a product manager looking into different offerings and identifying what can we do for our clients next, it's very much about merging the current market structure trends. What are the new types of venues that offer new opportunities for these executions, how they fit in with the client needs. And in this case, we have a large client base of brokers that are very much focused on benchmark offerings, on block executions, something that they can easily give back to their underlying client and justify that they have delivered best execution. So it's very much a balance act of client need, market structure evolving globally in general and in Europe with the different venues, but then also identifying how we can find the niche in our product offering there. So we still try to innovate very much in this very tight boundary that we were given.
Right, that's very interesting. And that also brings us to another challenge that Dor also touched a little bit up on. As those financial institutions are under pressure to innovate faster, many have to balance between building AI capabilities in-house or partnering with external providers. I'm looking here at the audience in the webinar. I'm seeing some trading platforms and banks. And Arietta, I'm sure they would also love to hear from your point of view at Swissquote. How, when it comes to build versus buy, how do you actually make the decision, and how do you choose your partners wisely?
Yes, so at Swissquote we are a bit different from what you would expect from a traditional bank. We have innovation in our DNA. We were founded by two engineers, so it means that tech and innovation is really the core, is the heart of Swissquote. And this means that we have the build first approach. So we want to build it internally. We have a very big and knowledgeable development team, and build internally means control, means lowering the risk, means that your legal team has the stamp into everything that we do in the project. And this is the legal part is really important because we are regulated by FINMA, so everything should be, as also Anna was saying before, every innovation should be done within the rules, within this boundary that the regulator is putting us. So our first choice would be the build. However, you cannot build everything and you cannot build everything at the same pace, especially when we talk about a very fast-paced environment or trend or even requests from our clients. Swissquote has 9 products, so from time to time you have to decide which part it's better and more efficient to partner with someone else who has the knowledge, because the resources are finite, the products are very large. So this is from time to time when we see that it would be more efficient to actually partner with someone that has vertical knowledge, as also Dor was saying before, for either a product, for a piece of the product, or for the data, or for example through the API connection. So we are very much open to partners. However, we are very selective and we do a very tough due diligence on possible partners, and Dor already knows because we have discussed this. Our legal team really goes very in depth. We prefer always a partner that is regulated, a partner that has license, a partner that is vertical in something that it would take us too long to build, because we would like to concentrate to something else, and we take this knowledge from this partner. But it's very important that this partner is trusted, and we have had this several times. Our clients do not accept, okay, this is what AI is telling, it's a black box, this is what it is, and you should just do it like that. We have to explain to our clients, who is the partner, how do we use this partner, how do we make the calculations in the box, is everything around making it transparent so that they can trust us, because they will give their data, their money to the AI kind of guidance, let's say, in the platform. So we cannot really go for everyone. We need to be very comfortable, and this is why choosing a partner takes time, but we are okay with it, because then it's really very important when we go for a partner.
Okay, so the choice of the partner becomes just as important as the technology itself in some aspect, or I'm sure you have something to add on that. And also, let's add on those verticalized expertise, Dor. Maybe you could explain a little bit more, what does that mean in actual practice, how it's implemented, and why is this specialization so important compared to any general purpose AI today?
First, I must say that I need to send Arietta some flowers because I couldn't ask for a better, let's say, prep for this question. Arietta, again, I had some, and the team, of course, had or will have also in the future some very deep discussions around these exact topics. And again, that's exactly the thesis of BridgeWise. Therefore, that would be a big portion of flowers, I would say. And I'll start by the way with the right end. That usually I'm not let's say that's not the core messaging of BridgeWise, but the time, because again the time is now, and having to, of course, to build stuff takes time. Time is of essence in that case. And beyond the time, based on, again, just like what Arietta said, there are some specific vertical stuff that needs to be applied in order for these, I would say, products, and even more important, services or solutions to be successful. One is the specific data that needs to be applied, because any model, either quote unquote traditional machine learning and of course generative AI, language models, quote unquote, is as good as the data that feeds them. And if the data is not good enough, or is not the best of its class, let's say, it will not be as good as possible. Second, very importantly, is the know-how. I think Arietta mentioned, and both Anna mentioned, the expertise that needs to be applied. And large language models knows everything. I like to bring it to our Japanese clients. These are the best examples, because if you go to a very good Japanese restaurant, they do only one dish, Why? Because they know they want to master what they do. And I like to bring that example to, let's say, generative AI models. If you do everything, you cannot do it as good as if you are focused on one thing. And that's, again, the know-how. Third, very importantly, is, of course, compliance and reliability. Without being able to explain to both clients and, of course, the firms we serve, and very importantly, regulators or compliance teams, how you do stuff, and what is the output. Arietta mentioned the black box. Of course, I think black box is history. It has, I would say no part, but very limited part of the future, especially in financial services, because black box is not good enough, both from the client trust perspective, and of course the entire value chain. As I said, the firms, the decision makers, compliance teams, and regulators, and again, we want to say we are experts in what we do. Not only, and I would say that would be my last point, not only in building stuff, because I think everyone in this forum and beyond knows that it's not only building but also maintaining and even more importantly optimizing the services. We also know how technology velocity is accelerating. Every day, every week, we have some new stuff that we need to track and follow and build upon. So it's not only building very good service, but also making sure it keeps up with market movements and market pace and demands, because that in the end of the day, what clients, the end users are that's what they want and that's what they demand. And that's exactly why naturally we are biased in BridgeWise, and we believe that the, let's say, the buy is better than the build. But I do agree that we need to fit into the build process, because even if you buy some stuff, in the end of the day, it's again, even if you are buying some solution from a company, either a startup or a more established tech company, you need to make it a part of the bigger product framework and the bigger product offering. So it needs to connect to the build you do, in a I would say in a good way. And that's exactly our thesis.
Right, and that's actually super interesting. And I want to kind of build on your point of not only building, but maintaining and optimizing. And this is kind of directing to all three of you. If we went back to COVID 5 years from today, we've seen this shift. And now we want to go 5 years from today and actually seeing where this AI, the next chapter of AI powered wealth experience, would actually look like from your point of view. Arietta, let's start with you with the user's endpoint. How do you see that in 5 years from today?
So I think that AI brings something that it's unique, and is a personalization. Clients will want everything personalized and targeted to them, and this is one of the strengths to AI. No one will accept in 5 years a product one size fits all. It's not acceptable anymore. We are used to have everything targeted to us. Just imagine also other examples, Spotify, Netflix, everything is around our way of using things. So it will be the same, I think, in investment. They will want a platform that targets to their needs and they answers their needs, they answers their questions even before they ask them. And this is what in product is know your client. We are client focused. We are obsessed with client in needs in Swissquote, and this is very important. So it will be the clients will not accept things that doesn't work or that takes time to go. They will want everything instantaneous. And this is a big challenge for companies and especially financial institutions where you are regulated, so you cannot do things so instantaneous because you still have to talk to the regulator before doing things, especially if it's something new, if it's something disruptive. So this is going to be the challenge to give to clients this. There will be more and more information for clients, more and more efficient, more and more digestible. There will be more interactions by chat. So maybe the user flow that we see today, click in this menu, opens the other menu, will simply disappear slowly. We will be used to do everything by chat. Nowadays, as I say, trust is important. So there is still some resistance to put personal information or financial information in the chat. But I think that eventually in the future we will overcome this. It will be our day-to-day activity. And if the chat, if the AI is inside a regulated environment of the financial institution, client will trust it with their data because they know that it's guided, it's limited, it's legal approved. So yeah, I think that all of these things that sounds crazy 5 years ago will actually be the new normal in 5 years, because COVID has opened the door to the retail market, but AI is opening even more. So maybe the retail client, the beginner ones, will start using AI more. The more advanced ones, they will have a bit more resistance at the beginning because they have their tools, their analysis, but eventually everyone will go closer to use AI in the future and use this tool to have a better investment experience in the platforms.
Yeah, 100% agree. I can definitely see the future going in that direction after overcoming those certain challenges. Anna, maybe let's talk a little bit from your point of view. How do you see this revolution playing out in the next 5 years?
I actually like to build on what Arietta just said, because I believe in the next 5 years or in 5 years' time, the AI analyzed data-driven strategies are certainly there, but they do need to be tradable. So we as an exchange, but also on the broker side, need to be fast in delivering the product that the client would like to trade. So that will be the challenge on our side, but we will be faster, and brokers will be faster as well to make these very personalized trading decisions accessible in a short time frame. So I believe that more asset classes will be traded across the board with the retail clients as well, that are still limited to professional and institutional clients today. And that AI and the data that feeds into the AI will help with that decision making.
That's actually really true. And Dora, maybe you can share a little bit of insights on BridgeWise is actually building that future. Maybe you can share a little bit how you see it.
Yeah, for sure. Um, I started from the very end. I believe that again, platforms. I guess 5 years is pretty very very much forward looking. But very even faster than 5 years, it will be my. I call it my service, my platform, my needs. Just like Arietta and Anna said, my service could be by chat, by voice, by clicking. You know, the old quote unquote the old UI. It could be my type of service. It could be information only. It could be what we like to call guidance. It could be potentially advice. Okay, each user would have to or would be able to choose their own style or own, let's say, unique way. Also, by the way, with their investment, also just like Arietta said, needs. One of them is a long-term investor that want to quote unquote buy and hold and want the AI to help them both identify the right opportunities, but even more importantly, maybe rebalance their portfolios from time to time, etc. Or if you are a trader, a more short-term investor, you want to, let's say, the AI to help you navigate the book, or again, many other stuff that are more important to you. And it will be me in the center. Me, I mean the user, not the door. I hope. And the AI services will be around me, or again the user, to help me do what I want to do better. Now, in a more let's say structured way, we all see a clear shift in the user behavior, and that fundamentally changes the role of platforms in any service, all the way from Netflix's and Spotify's, and even our shopping, our grocery shopping list. It all becomes super hyper personalized, and it's not only execution. Execution again, if I want to do a VOD or hear some music, it's not only execution, but it helps me a guide through the opportunities, and that would be also in investments. Execution only platforms, I believe, if they stick to execution only, will be under pressure because they need to provide more value. Otherwise, it will be a game of price, and that's not the most service providers want to be. And that's exactly how we see the role of AI agents like our PI, which stands for Portfolio AI. that of course, dependent on the partner's regulatory framework and the client needs, as I said, can do all the, or mandate can do all the way from guidance to advice to let's say what I like to say call hand holding. And it can do anything again for the user. That's exactly what we want to enable at scale, of course. It's, I want to say, also relatively fast. That from a B2B perspective, there are two main constraints: risk and cost. Like again, opportunities and a downside and upside. On the risk, of course, enabling institutions to safely delegate intelligence and these sort of services from the, let's say, human driven solutions that tends to be less personalized and more expensive. And I'm saying it as a human in the end of the day. I'm not an AI, at least for now. And on the other hand, of course, there is a clear upside on again, client satisfaction, stickiness, and of course retention. And these are the very important business goals that we want to serve. So the combination of expanding again both the user expectations on one hand, of course, the regulatory boundaries, but also what the AI services can do both on the efficiency side and most importantly on the value side, is the most important structural shift. And again, our thesis is that platforms has to move up in that value chain, moving from execution only to more valuable services. Of course, execution is very important, but we need to go beyond that in order to, one, maintain the business, but even more importantly, grow the business.
All right, that's awesome. And right before I'll wrap this up, I want to make sure that if you have any questions, please drop them in the chat and we'll open it up in a second for questions. We'll try to get to all of your questions. Let's see what we have here. Where do you all think Europe regulatory caution actually works in your favor rather than slowing you down? I'm guessing Anna and Arietta, you can take a spin on that.
Maybe I can start. I don't think it's slowing down, because it would be slower if you do something and then something wrong goes when it is in the market. So I think that it forces product team to be more creative and to actually play within this regulatory guidance, because I don't think it's a limitation, it's a guidance. And this will also help the product be a stronger product, but at the same time also be better accepted by the final client, because as the regulator stamp, and is something that they can trust. So I think that is more challenging for product teams, and it forces us to be more creative, but definitely not slowing us down, just giving us more work, but a healthy one, to bring a better product to the client.
I'd like to second that, actually, because we've seen in the past that when there was a new regulation, and MiFID II was one of those new regulations, that really the market put their heads together and it created trading venues, in this case, that didn't exist before. So any change is always a spark for new ideas, a spark to think about what does the market need. And the regulation is there for a reason. We are all in favor of investor protection and the ideas behind those regulations, and therefore innovation like periodic auctions or other trading venues, something good that came out in the past, and this is something that will continue with further regulation coming as well.
I want to jump in very, very quick, if I may, to say that I believe that regulations, and again, let's say compliance needs as a topic line, can help teams accelerate, not slow them down, because you have to be active. Again, I can speak on behalf of BridgeWise. We are active in a way that we go and directly engage with regulators, both asking questions and also providing what again, the word guidance came up more than once, provide guidance on where we believe it should go, because I believe regulators want to, let's say, move the industry forward in a way that also helps them. A part of regulators that we have engaged with in all across the globe see AI or see some of our solutions as an advantage compared to, let's say, more traditional services, because of, again, traceability, because of explainability, in a way that, again, sometimes is even better than quote unquote traditional human in the loop services, because of, less variance, again, more traceability. Everything is logged, everything is explainable in a way that is, again, I would say more convenient for regulators to follow and to trust from their perspective. So again, if you look at regulation as something, as an advantage, okay, both organizations, startups, and of course, let's say the entire value chain would benefit. You cannot go gray. You have to go full straightforward with the regulators in order to, one, comply, of course, and second, lead and design the future, because they are an important part of the ecosystem.
Okay, another questions I have here in the chat. Dora, maybe you can start on this one. Dora asks, how is AI integrated in investment execution other than gathering and processing data that contributes to decision making? For instance, is placing an order already being delegated to an AI agent by sending a prompt?
Sure. So definitely yes. I can say that one of our clients is just onboarding Pi, our agentic wealth, in that case, advisor. It's actually an advisor. They wanted, the bank wanted Pi to be able to execute the actions, or the, let's say, the orders, quote unquote, on behalf of the client, in a way that it will be one tap or one prompt to the actual trade, of course, with the relevant consents coming from the client, and of course, disclaimers and full disclosures. But yes, definitely it goes there. I believe, again, the agentic, quote unquote, on behalf, again, actions is something that we cannot hide from. Otherwise, it will be somehow, it will be A to Y, not A to Z. A to Y is still good, but we need to go A to Z. Otherwise, we would leave some value on the table, and we want to take the entire value for the client. So it definitely goes there. Again, there would be organizations that would prefer not to, given some, again, risk aversion, given some compliance needs. But that's the beauty of an agile solution. I want to say that each organization can design a as per their needs, per the constraints. But it definitely goes there. Yeah.
Amazing. I have a fun question for Arietta, and please feel free to join here in the chat. How do you do the onboarding of AI tools to be confident? Do you test different users cases or any other strategy?
So at the moment, every AI tool that is in Swissquote was built. So we did not do any partnership yet for the AI tools that we have now released. But we can have partnership for AI products, but also for other kind of products. And the onboarding is normally we discuss with more than one partner always. So we do a comparison between the product of different partners, and then we choose a short list. This short list goes through a due diligence with our compliance and legal team, and given that on product side we are okay, so it's covering the needs that we have on product side, we test it, then it goes into the legal and compliance team, and then we choose the one that better fits our needs, especially also in terms of data management, trust, and transparency, and regulatory. So not yet, we don't have an actual partner for AI because we built it all internally so far. But if we would do it in the future, we would see more than one case, and how this can react to the specific need that we have at the moment. And then we would check the whole compliance part.
Dora, do you have anything to add, or Anna, to that question?
Not
All right.
for me.
All right, so Anna, there's another question for you here. I think you can answer that from the exchange seat. What should brokers and platforms keep in mind so the flow that they send would actually execute well?
Oh, wow, this is a very broad question. So what do they need to, so what is the definition of execute well in this scenario, right? You you have always different strategies in mind when you start when you start your strategy. So is this a very large order compared to the standard market size in the market, and therefore might need to be traded over multiple days to ideally not impact the price of the asset class that you're trading too heavily, because that would have an adverse effect to the benchmark that you're measuring in the end. So I'd say one of the key aspects that brokers, I would recommend brokers to keep in mind, is exactly that, the market impact of the orders that they send to the market. And with market impact, I mean, how much do they affect the price if they would put the whole order size into the market at once versus split it out over a longer duration. And then with that strategy, you can have variance if you want to do VWAP or you want to achieve a TWAP benchmark. But the key part of all of these benchmarks executions is still the impact that your order has in the market and how to optimize around that.
All right, so since we're a little bit short on time, I would like to wrap this up. I'm seeing a few questions that we didn't answer in the chat, so please feel free to write on our LinkedIn or reach us via our website. And I would like to thank you all for listening, and thank you again, Anna Roth from SIX, Arietta Haskan from Swissquote, and Dore Ligula from BridgeWise for an insightful conversation. I learned a lot, and I'm sure you all have too. I'm hoping you're all going to have a very good day, and thank you for joining our webinar.